Hi traders, it's GJ here and welcome to the week ahead. And I am really excited about what the next week in the currency markets could give us. And let's get right into the housekeeping right now. This video is only for educational purposes. It expresses my own opinions and is not giving financial advice. By watching this video, you agree not to hold the distributors of this video responsible for any of the ideas and opinions expressed. Trading in the currency market is high risk, and because of the high leverage that is used in trading, you can stand to lose some or all of your money. If you have any doubt about trading the currency market or feel you need investment advice, then you need to go to a qualified and registered financial advisor before any investment is made. And without that, further ado, let's go and have a look at the charts. So let's start with the dollar index and take a quick look. You can see here that over the last week or two, we had this fall from grace all the way down here, and we're at this level of around 93, and it's pulled back up above this range, and you can see that where it's settling is it's not one or the other. It's not securely above this range and it's not securely below this range, and it's just taking a rest, and there are varying opinions as to where and what this thing is going to do. So in regards to the dollar crosses, keep an eye on this, because if we get another significant move down here, you will see pairs like the Aussie USD, New Zealand USD, US CAD, US Swiss, USD JPY begin to strengthen against the US dollar. Now, it doesn't necessarily mean that the strength in those currency pairs will be the primary pair like the Kiwi or the Australian dollar, because both the Kiwi and Australian dollar are really weak as well, and they are facing some major hurdles in terms of their economic outlook. The COVID thing has started to take root again in Australia. Well, it's been taking root in some states. Brisbane is the only one at this stage that's free, but it's got a firm hold again. And the government are having to pour money in to keep the economy afloat. New Zealand is having to do that as well. We've got new cases, and Auckland is in what we call level 3, not level 4. Today there's an announcement with what the government are going to decide. Is the rest of the country going to be at level 2 and Auckland stay in level 3? So there's perilous, volatile days ahead. So we need to trade what we see the market is doing, and your support and resistance levels are very, very key to that. So take a common sense approach to the market. If you have a strategy that has been working in the past, don't chuck it out. If you know your strategy works and you've got good money management, keep walking. Don't be frightened, because it doesn't matter whether the market's going up or down. If you have a sound base and a sound foundation, you can still make good money out of the market. There's still plenty of opportunity. So let's just take a quick look. Right now, we're looking at the daily time frame, and I'm going to not be too long. At the moment, there is nothing here on the Aussie CAD. You can see that it topped out here at this level of around 96. We have, if you're a pattern trader, you can see a crown or a head and shoulders at least. It broke the head and shoulder levels. There's the left and right shoulders. There's the head. It broke the shoulder, came back and has had a retest. And this is the key level right here. Watch for a break below. You, in my humble opinion, need to be looking for some sort of bearish signal like this, or an engulfing candle. Here's another bearish signal, boom, boom, and then a break. So that's high on my watch list this week. There's nothing happening with the Aussie Swiss. We're still down at very low levels. If we take a look at the big picture on the month, here's the low, the historical low, and we're settling, looks like we're settling in here. Now, can this go lower? Absolutely, but right now, there's no trade, in my opinion, on this pair. And I would be very interested in taking another trade here if we get some similar scenario. But right now, just take it easy. Don't get too greedy. Don't get too enthusiastic. Aussie JPY settling out. This is the trade that we've had in the past few weeks. See these strong monthly candles? But it's hitting major resistance. So if we go back to the daily chart, you can see how it's been playing out. It's hit this resistance and it's tested 1, 2, 3, 4 times. And it's broken that trend line. And, you know, it doesn't matter what strategy you have, no matter what strategy you use, it's not foolproof. And we know that we look for confluences. Well, here's a confluence here with a trend line and a break below a key level. But it's just not gone anywhere for the first part of last week. And now it's playing out in here. It's stalling just in here. So for me, it's not worth trying to take it down to here. Just wait and just see what happens when it gets to this key level, because this is a key support area. It could get stuck in this range for the next couple of weeks. So watch your levels. Aussie, New Zealand. This was the move. We talked about this weeks ago from way down here. Look, the engulfing candle, the key level of 106. This is the moves that we want. These are the big dollar moves. And if you've got an entry and an exit, you can ride some of this stuff up. There was over 400 pips on that move, and it's not, it doesn't give up a lot of pips, this pair, you know, in terms of runs. If that had been, say, a pound cross pair or some of the more bigger daily trading range pairs, that could have been worth 500, 600, 700 pips. So patience is the key. And if we just squash that down, you can see that we're in clear country. And once it cleared out and broke these key areas of resistance here, away she went. You know, like you always hear me say, trading's not hard. It's actually quite easy. You just have to have a good methodology, a good strategy, sound financial management, be happy to lose and keep your losses small so that your winners can be bigger. Here's the Aussie USD. Now, we have been up above this level before, but bear in mind, we're living in uncertain times. And remember when we talked about this range here, we're looking for a breakout. Well, this range box is now moved. And you could put this range box right in here. And I don't know. Let's see if we can get that up. There it is. Look at that. And now we're waiting patiently for a break out of this range, because it is going to break. It might be a week, it might be 2 weeks, might be this week, might be next month. And you just sit and you wait. I don't want to trade in here. This is where traders get beaten up. CAD. So let's take a look at the CAD Swiss. Here we go. We're at historical lows here. We're still down in the bottom. And I am really looking forward to a good move up. There's a couple of factors that you'll need to be aware of. You'll need to be aware of a really strong rise in the Canadian dollar due to the oil price rising. But right now, in these volatile times, it's down, and it's down in the bottom country down here. So there's no trade at the moment. If I get an engulfing candle and a break of this area of 69, you can see here, it's just a little bit lower. No, it's bang on the button, 69. If I get an engulfing candle here and it bounces off the bottom of this, I will be going north again. CAD JPY, we've had a very good move up over last few weeks, and last week we had a pullback. And then we went sideways. The week before last, we had a pullback, and then it bottomed out in here. Is this getting ready to jump off this support past resistance area? Now, the way I would handle this is be looking for some sort of engulfing candle, getting in small, or waiting. More conservative approach is to wait for this high to be taken out in this level of 81, and then go for the doctor. Swiss JPY, two neutral currencies. They're both safe haven currencies. I'm not trading this at the moment, except when I get breakouts of key levels. And the Swiss has been probably the strongest currency out of the eight currencies, main currencies that we trade. And there's been marvelous opportunities all the way back up. And for me, I'm always trying to trade in the direction of the trend. This has not reversed yet. And right now, I don't see any opportunities on it until we get a break at key levels. Euro AUD still just down here in the doldrums. We marked this out several weeks ago. If we get a strong move, we could test this back here, this area here. And if we get a break of this, we could come back up, and it's open country right here, no trade. No use wasting time on it. Euro CAD, you know, I saw this last week towards the end of the week, and I took the trade from here and got out of the trade, closed it before the weekend. I'm now looking for some sort of retest of the backside of this trend line and a break of this low point. It is suspiciously looking like we may just get more sideways movement, because you have a key area of price where price was reacting down in here. Now there are 200 pips almost, or 150 pips to go. So this could be worth a little scalp. But here's the big one that it's got to go through. So don't get too enthusiastic if you get into a trade this week and you start to get up. Just guard your profit and be prepared to take it when it's there. Nothing here on the Euro Swissy. We're still in this range, so I'm not going to waste a lot of time. Watch your levels again. We've got Euro Pound is the same, in the same boat, and that trend line obviously needs a bit of adjustment now. And you can see the range. Look at the range. Look at it. You know, it's sort of like here. Until it breaks out of this range, until we get a really strong move out of it, there's just no trade, nothing for it but to sit. Euro JPY trickled down last week, and then we had this impulse move out of, if I remember rightly, the London or Frankfurt session. I think it was the London session. That was a nice little trade, but bear in mind now that here is a key area of support, and that was the move in there that we caught in the London Open. So nothing to get too excited about, but there are little bits of pieces that you're well able to get out of the market, and that's fine, but take your money when it's there. No trade Euro USD. This was the trade after an engulfing candle on the daily candle change. We've ended up, was quite happy with this trade. Ended up with about 60 pips. It ran 80. I just got out at the end of the week because I could see that this was a strong, strongish looking support area that was starting to form, and it's 1.17 price point. A break below that will open up this down here to the downside and could have a good move. But if we get significant weakness on the American dollar, the US dollar, you could see this break of 119. It opens up 120, 121 area. Euro, New Zealand. And, I had a little rush in the head on this on Saturday in the London and got a few more nickels and dimes. But look what it's doing, you know, in terms of the big picture, the daily time frame, it's just going sideways, and these are the key levels, and we're not going to get any great big moves out of this until these key levels are broken, in my opinion. So, you know, and we don't want to get too carried away with our trading. Still range bound in the pound AUD, so all I'm doing is watching these levels. Nothing's changed, nothing's new. The pound caddy I did take out of the London for the last session for the week. I'm still holding this. I just like the look of it, and the reason I like the look of it is because we were bouncing off key area 176, and we came down about 3 or 4 weeks. Is it about 4 weeks ago it started, then it leveled out here, did a retest, and then it broke again, and then it did another retest. So there was bits and pieces that we were picking up in here, and then it, over last week, the end of the week before and last week, it was just going sideways. And so I had these areas here, marked out, and you know, so it was forming a top here last week. So you had Monday, Tuesday, Wednesday, Thursday there. Sorry, Monday, Tuesday, Wednesday, Thursday, Friday. And I was just watching these areas, and before I went to bed, I noticed it was breaking the criteria for my London candle, and I'm in it. And I've got to think, this looks good to me. This could retest these areas down in here, and when the market opens, we'll have a look to see what we've got. I'm going to be trying to hold it. First, second positions, if it's come down into here, will be off, and I'll just let the third position run on down and test out this area here. Pound Swissy. I'm trying to will this thing to go up. This is the historical low down here. Here's the bottom. We've had this bottom, and I believe this is destined for a decent move up, so keep an eye on it. But 1.2 is your key level. A good engulfing candle, something like this here, off this support area, when it becomes support, will be a good signal in my opinion. So keep an eye on that one. Pound JPY, just topping out again. This 140 is quite a significant level here. You know, one you can see here, it's struggled. It's got to get through here. And if we run a horizontal line and pop it in here, you can see how key this 140, 141, 142 area is. Now, if I break this level here and get a bounce off 139 this week, I will try again. But this seems to be a really tough level here. It's in line with this support and resistance area here where prices struggled before in the past. And if you want to see that more clearly, we can just move that up to there. Look at that. So stay patient. Pound New Zealand, really enjoyed this trade up here, but it's started pulling back off these key levels here at around 200, and you can see that price was reacting at these points in here. So not surprised. So right now we'll see how much of a pullback we get, whether we get sideways movement or a pullback. If we're coming down and retesting this area here, I will be looking for this to continue, but bear in mind this could just end up range bound for a while. The pound is not out of the woods yet. We're getting closer and closer to the day when UK is going to get out of the European Union, whether they've got an agreement or not, and that's going to cause some good reaction in the market one way or the other. So stay patient. Pound USD, this 132 is a very key area, and we've had a bit of action up and down here last week, a little bit of volatility, up, down, what we need to see is a break of this area here at 1.30. We get a break of that, we could see some downward pressure, especially if the if the US dollar holds and even begins to make a move back up, even though it might not be a strong move. It might settle in and around where the dollar index is at the moment. This will be just business as usual. New Zealand USD. Right now, it's just not been able to break 67. And the way things are looking in the economy here in Kiwi land, I'm not expecting the Kiwi to get too much higher unless the bottom falls out of the US index. It's gonna really struggle to get past this point. So I've got pending orders at key levels. I've got pending orders here under 65. Break below that would have me just a little encouraged. I wouldn't say excited. But I just see more of the same. Now, eventually, it's going to make up its mind and it's only going to move higher and strengthen, which I think is not a high probability. To retest these highs, yes, easy, we can do that. To get going and get above this, that would, take something that would fuel it to make a decent move past this. So I guess I'm currently looking for some bearish signals to go lower, bearing in mind that it's about what the market wants to do and I'm staying flexible. So a break of these key levels. There you can see head and shoulders forming up in here. So this key level of 65 will be key. We get a break of the neckline. I will try my hand at it. So here we go. We've got New Zealand Caddy. We've had a lovely move down off these highs over the last couple of weeks. So I hope that you've caught some of it. This here is a key level where it has stopped, and we need to see a break of this area here, support and resistance, where price in the past has reacted. You can see it's key. So if we get a turn and a bounce off here, that's potential trading territory, just like it is when it has a break of this key support resistance area. New Zealand Swiss, much like all the other Swiss crosses, it's got to break this level here. We've talked about it. A bounce off here, yes, I'd attempt it. I'd much prefer this to pull back a lot lower, because I think from down here, got a great opportunity. New Zealand JPY, very similar to the Aussie JPY, not a lot in it. So just be patient. This key level here is really important. And we might as well change this colour, eh? And until it breaks down below this, I don't think we're going to get a significant move. And just like this is a key level now, just stay patient. We've got a double top up in here. This could come down, have another crack at this level. But before I get too excited about strengthening and becoming a decent carry trade, it has to take these highs out. Then we've got the USD Caddy. Been some lovely trades down here, and here I've got my key levels marked. We're not, for me, I'm not doing anything until I get a break of here to go south, or if it comes through, breaks the trend line and the confluence of this resistance area, which now needs to come down probably into about there, and we have strength in the US dollar, I would be keen to have a crack from up here to try and get a decent trade from, down in this area. USD Swissy, just pretty much the same. It looked promising a few weeks ago, looked like it might have been coming down, and you saw that I drew the possibility if it got down here, retest and then carry on. It's just run out of juice, so just watch the key levels and watch your strength indicators. USD Japan, this was the move that I was in. Last week we had a retest. and it looks like we're just maybe in for some sideways movement. This here, 105 is a key area, and any broach or break of this key area with continued and significant weakness in the US dollar, you're going to see this thing come on down. Otherwise, it's just patient and wait. I wouldn't be too keen to get in and take a move north with any great confidence. From here, I've got no problem trading from here and hoping for a retest up this area, but this thing is starting to look like it's starting to show signs of trending down. Let's go to the gold. We've seen this pull off. This was great. I thoroughly enjoyed this. Made heaps of money. Traded this back down here. Got on the poo because my EA didn't work properly, and it hadn't taken my stop loss with it. When it came back, the stop loss was still down here. Woke up in the morning and I had to trade my way out of this stuff with hedge trades, etc., etc. It looked like it was going to get going early in the week, last week, but it topped out here at 2,000 again. And no matter what your opinion is, it's the market that's going to decide. And there's plenty of people would say, well, it couldn't break 2,000, so it's due to come back and retest this. It could easily retest these levels. All I know is that the bigger picture is that the party's not over yet, and sooner or later we're going to see gold prices because of the current economic conditions go a lot higher than 2,000. That's my personal opinion. So I'm not trading this at the moment. I'm just waiting. A break of 1,900 this week. I may be tempted. Depends on what's going on in terms of economic data and news, and we'll just wait and see. I would love this to come back down into here. The lower it comes, the better I like it, and the more I'm rubbing my hands together. So it's just patience. Silver is very much the same. It has pulled up a little bit higher. It did make this run back down and retest these levels here of around 24,500. Looks like we're just going to get into a holding pattern. You go back and you have a look at history and you can see some of the holding patterns. Look at the trickle here, and look at the sideways movement, for weeks, and then boom. And I believe in the big picture, in the big scheme of things, there's lots more money to be made out of silver, and we've just got to wait. For me right now, 28 is a key level and 26 is the other one. A break below 26 could indicate that we're going to come and retest this area around 24 again. So be patient, take care out there. There's plenty of money to be made, but you must have a good system in place. You must have your algorithm sorted out, you must have your strategy sorted out, and you must have your money management sorted out. So looking forward to this coming week. The market is opening shortly, and it's going to be another great week for those that are cautious, bold, and sensible. So protect your capital. Without it, you can't trade. Be willing to take the profit. Be willing to admit that, oops, it's just a little fakey. Don't be frightened about that. You haven't got a crystal ball. Be happy to lose, but make sure you lose small and win big. Take care out there, and we'll see you in the chat room. Cheers.